Hear me. You want to understand? Hey, John, you hear me, bro?
Yeah, yeah, I can hear you.
How much?
Kind of.
I
You
want to
sound like you're
understand.
far away.
Okay, how about now?
Yeah, a little better.
Okay, wait. Oh, I was using the wrong mic. How about now?
Yeah, much better.
Okay, so essentially, what you want to figure out is, hey, John, how much do you need right now? Because I'm looking to help you with the taxes. And as you know, the more you take up front, the less you get overall. The less you take up front, the more you get over time. And that is not including taxes. You understand that Biden is now coming into presidency and he's looking at a 60% capital gain tax, especially in California. So let me ask you this. How many years have you been involved with this company? Do say, oh, 10, 20 years. And you think it's fair after 20 years of hard work, somebody comes and takes 60%, which was going to be your retirement money. You think is that fair? That's
Hmm.
theft. It's not fair, right? Like, yeah, but what can
Right.
you do? Taxes, da da da, all that shit. You're like, nah, it's bullshit. We could help you out with the taxes. I want to help you out, John, with the taxes. You said you want to stay on this business. That means essentially we're now becoming partners, and we got to treat it as such. So we want something that is mutually beneficial, not only for you, but for me, and most importantly, for the company. We don't want to bleed the company out where it doesn't have enough cash flow to continue operations just because you wanted to take it all. You know what I mean? You want to make them understand, dude.
Right.
Remember, the business is their baby and they got an emotional tie to it. They're like, oh, yeah, 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 makes sense. So, what I have in mind is if you don't need much right now, John, what we could do is because look, if I were to offer you upfront the money, you'd be looking at walking away with $2 million, from which about a million would go into your pocket or 700,000. If we were to incorporate seller finance 60/40 over a 10-year period, you'd be walking away with about 2.6 million, which about 2.1 would go to your pocket. Way better. But honestly, after 20
Hmm.
years of being involved in this business, do you think that's even enough? Private equity, I know they're offering you're looking for a 7 times multiple. That's about, let's say, $5 million, because net's about 600, or 7 million with 1 million EBITDA. Let's incorporate taxes, 40%. How much you're walking away with Biden's policy, 60%? How much are you really walking away with? Nothing. Hey, so want to be a part of this business? Look, John,
Hmm.
what I could do for you is we could agree to 20% down, so you got some pocket change alongside salary because you're staying in the business. What I want to do is, what I
Right.
have in mind for this company is I want to build a one-stop shop where we're one provider and service, we have multiple services under one provider, essentially, right? We cover all
Hmm.
bases.
Hmm.
That will give us a dominant edge, a dominant position in the marketplace where nobody could come and fuck with us. People would rather get multiple services from one entity they trust than going around to 10 different services. And as you know, the tech industry is very fragmented in the sense that there's so many providers, people don't even know who to go with now. You know what I mean? What we
Definitely.
want is customer
Definitely.
retention. And as you know, in regards to sell, the best sell is not the new customer, but the old customer. Getting the same guy to keep buying more. How do we do it? By offering more services. And just because of that, we're going to be able to create a higher valuation where you're looking at a 7 times. I'm going to tell you something. Companies, tech companies, especially one stop shop companies, if you take them to a stock market, hits around a 20 times multiple due to liquidity and the infrastructure we created. So, what do you rather take?
Yes.
7 times, which you're actually pocketing 2 times because of taxes, or 20 times? You know what I mean? So what we would
Hmm.
structure is 20% down, and then I'd say 60% or 50%. If you want to hold on to 30%, 50% paid out over a series of years. I'd say until exit in the next 5 to 7 years. Let's run it at 7 years, where payments increase as the company grows. And not only that, I can offer you a portion of equity of every other company we merge onto this one. Essentially, we're going to use this company as a platform and add on to it. And you're going to be the one who's going to be in charge of it all. You know what I mean? With that equity
Yeah.
portion at the end, that 20-30%, you're liquidating at a way higher value. Would that be something of your interest, John? So you want them to agree on a structure first, because that means if you
Before
get
you
the
talk
fucker
numbers,
to
yeah.
agree on the structure where he says, "Yeah, that sounds great. Fuck it, I don't need much. I only need, let's say, 500,000. Done. You got the business at 500K. You get what I mean? And the rest is seller
Yeah,
finance,
no, definitely.
contingent upon after covering expenses, whatever's left, you can allocate a portion to a seller with equity at the end to liquidate at exit. You get what I mean? It's a fucking home run, dude. You just stole
Yeah.
that business basically. But
Yeah. Yeah.
you're creating that win-win in his mind, where you won by taking that shit for a fraction of the price, just 20% down. You know what I mean? You go
Right.
to a fucking bank
Yeah.
and say, "I need 500K." It's doing 650. They'll give you that shit. Hey, take it. You know what I mean? Just
Yeah.
20%. Who the fuck are you? They've never seen deals like that. And 80% is seller
Yeah.
finance. You know what I mean, dude? And that seller finance is no, actually 50% or 60% is seller finance, and the rest is equity. He liquidates at exit. You know what I mean?
Definitely.
Where
Definitely.
that 50% is paid out contingent upon the growth of the company, and you just pocketed a business like that.
No, yeah, that makes a lot of sense.
You get what I
Makes a lot
mean?
of sense.
And in his mind, this
Mm-hmm.
is what he's looking at. I'm getting some pocket change right now. I'm also taking a salary position. I'm gonna get paid out for the next 7 years, and I'm gonna be able to liquidate a portion at a fucking 20 times multiple. What the fuck more do I want? Plus a portion of equity of every other company they merge to us, and they're gonna take my existing company to a next fucking level. You get what I mean?
Yeah.
You just pitch them fucking. You just pitch them resurrection. You resurrected the old fuck now. Reincarnation. You know what I mean, dude?
Yeah.
That
Yeah.
is the perfect fucking structure. And what I'm gonna do is I'm gonna work to put it on paper where you could pitch it and it makes sense, and he could grasp the idea and understand it in a simpler way. As soon as he fucking agrees to that, bro, you're done. You got the deal. You just fucked over private equity, anybody else, because they don't know how to pitch like that. They can't. It's
Right.
too much risk on their side due to investors. The higher
right.
the seller finance, the fucking better it is, because that's less risk on the bank side, meaning a smaller LTV. You get what I mean? So you tell me who the fuck knows how to negotiate, dude. You're gonna fucking
So
knock
would
that
you
shit
do
out the
that
park.
too, like for the? Oh no, for sure. Well, and if you have a higher seller finance, it should be easier to get an overfinance from the bank because there's less risk put into it on their end. Correct?
You could take that shit like nothing, bro. You could take that shit like nothing. You just say, I need 500K working cap. That's it. You know what I mean?
Yeah.
That's it.
Yeah.
You
No,
don't have
that's
to worry
awesome.
about that shit. Because remember, that seller finance is contingent upon, the performance of the business. And payments can increase as the company grows, so on and so forth. Which essentially the dude is willing more to sacrifice, because you tell the fucker, we want to keep some money in the business in order to use to integrate other businesses. You know what I mean? We want pocket change that if we're able to get a deal, we could put the money down without an issue. You get what I mean, dude? Working capital. Remember,
Yeah.
you're pitching a dominant position in the marketplace. Risk exists right now. High taxes exist right now. Competitors exist. How do we mitigate it all? A one-stop shop.
Yes.
You get what I mean, dude?
Yeah.
But
no, totally.
remember,
Well, and that's
when you buy the 20%, you keep 100% of the cash flow, because you got to pay for everything.
exactly.
You got that bitch. It's yours. You could buy 1%. You still own every single fucking penny that comes, and the business goes through your hands before it goes to anybody else.
Yeah. Yeah.
You know what I mean? Make sense?
I do. It does.
So you tell those fucking QLA morons, go back to school, motherfucker. They don't know how to negotiate, dude. Skip, next. He's not motivated enough. Nah, you just don't know how to pitch, motherfucker. That's how you pitch a motherfucking
yeah,
deal.
I
That's how
know.
you close a deal. You
A
know what I
lot,
mean, dude?
a lot of those kids are crazy. They don't. It's lazy thinking.